Good morning, Mark, and a very topical conversation today. We're going to be talking about cryptocurrencies.
Yeah, Ben, definitely something on everybody's lips for so quite a while now. What are cryptocurrencies? Is it an asset class? Is it an investment? Is it a currency? Where do the returns come from? What about the volatility? Yeah, I think we'll cover all of those things today.
Hello and welcome to Real Financial Planning with Ben and Mark, two lifestyle financial planners who are passionate about helping people understand their money and what it can do for them.
So, when someone says to you cryptocurrency, what sort of springs to mind? What do you think about?
Sure. So I think straight off the bat, you're thinking of Bitcoin and Ethereum and Ether. I think those are the big ones. But there's two things that come to mind. It's is it a currency or is it an investment? And I think that's where a lot of people maybe get hung up. And originally, I think it's meant to be a currency, so you can use it to purchase things. But I think what most people are actually trying to benefit from is the investment side of it. So the volatility of the asset class or the investment of Bitcoin, of crypto, that's where people think that they can make a whole bunch of money from.
Yeah. I mean, I think the name is a little bit of a giveaway. Cryptocurrency. It shows you that it is actually a currency. And what you're talking about there with the volatility, I mean, with all currencies, got the US dollar, the pound, the euro, even the South African rand, it does go up and down with value. You could also hypothetically, buy rand or dollar, and as it goes up, sell it and buy more dollar when the value comes down. But I think, like you're saying, there's so many big swings in the volatility of cryptocurrency that there seems to be a bit more gains and I guess then as well losses in cryptocurrency. That's where people are finding that investment.
Yeah, I think for me, it's not being used as a currency. No one's taking their rands and buying Bitcoin and then going online and buying something with their Bitcoin or fraction of Bitcoin. Whereas people do that with hard currency. If you're going to travel to Europe, you'll take your rands and you'll buy euros, and then when you're in Europe, you'll go and spend your euros. There is a market, I guess, for people trading in currency pairs, but it's not as hyped up as crypto is, right? And it's pretty stable, your currency. So rand versus dollar, or maybe take the rand out because we all know the rand's the most volatile currency in the world. But if you look at like the rand euro, those things are moving based on news. So what happens in the US and then in Europe and the Fed and all those decisions. But when it comes to crypto, the swings are so huge that it's not predictable. You can't say, oh, okay, great, someone's going to make a crypto announcement today. Just like when Elon Musk said that they'll be accepting Bitcoin as a tender for payment, and plus he's going to invest $1.5 billion in it, and then the price just went through the roof. So that's kind of like controlling of the market. Then he was like, no, we're not happy with the what did he say? He wasn't happy with the energy source, and then he pulled it out, and then the price crashed. So it's really like what you're trying to achieve from it in terms of what your return could possibly be.
And so basically what we're saying is that it is a currency, and people do trade currencies. I'm sure everybody's been solicited by some sort of forex trader. So we do know that people do trade currencies, but it's not an exact science. Otherwise, everyone would be millionaires if the forex traders were true. And so Bitcoin is just another thing of that. So I guess that leads us to the question then is, should this be added as an asset class or as part of our portfolio, maybe in our total investment portfolio?
Yeah, I think that's probably the most relevant thing is, right? So regardless of what it is it a currency, is it an investment, the volatility, should I have some? Should I include it? Because I think people, like the idea of participating in this investment that goes up in these huge swings, and they want to be involved. So when we're asked with that question, I think my answer is yes, if that's what you want to do, invest in some. The next question then is how much? How much should I invest in crypto? And what do you normally tell your clients?
Well, there's two things that I would say to them. Is one is the thing is go for it if that's what you want to do. It's your money, right? But there's a few things I'd caution. Is one is that remember that cryptocurrency still is not regulated. So if something does happen or you invested in some way, there isn't too much of a recourse. So you just got to be very careful around that because there's no legislation around it or regulation around it, should I say. And we see very often about these big companies, that have suddenly disappear. The CEO disappeared with however millions of Bitcoin and this disappeared overnight. The other thing is you've got to think about, remember, also we're working towards the overall plan of a client. And so what percentage can you afford to lose? So I would just say, use the money that you can afford to lose. So if it all just disappeared, what are you okay with? And I think that's kind of a rough rule of thumb to use because you don't want to jeopardize or plan your whole plan or your life around this Bitcoin or cryptocurrency doing well or achieving this percentage because we can't know that. And so I think, if you know what you can afford to lose and use that money, I think that's a good rule of thumb.
Yeah, I think, what you've said now, Ben, is no different from how we would advise a client on any other investment or asset class that we deem to be high risk. Take private equity, for instance, right? How much should I invest in private equity? It's the same question, and I guess it's the same answer because we're applying a general set of investment principles to the client's portfolio. So go with your traditional things which are tried and tested and regulated, and there's some history as to how they will perform in certain market conditions and over certain periods. But then when it comes to these alternative investments, it's really how much can you afford to lose, and that's how much you should put in there. So if that's 50%, you're in a very fortunate position that you could stand to lose 50% of your net wealth and still be financially okay. For most people, I'd say it's between 5 and 10% at an absolute push. But it's put it in there and leave it there. And if you lose it, you lose it. And if you become a super success story, then that's really lucky and well done.
Yeah, I think it's so true. Is we've got to follow the normal rules of investing. So are you got to invest long term? What are you trying to achieve with this money? What are the goals? We did a few about goal-based investing. And I think you're just got to really look at that and understand what is this money trying to achieve. I don't think you're going to become a millionaire overnight. Just one or two stories that you hear about on the news, but it's not everybody. I think that's just almost like winning the lotto.
Yeah, I think one of the big things also for me is that I try to guide clients on is try and take the emotion out of it, especially with something like cryptocurrency. It's a topical thing. People want to talk about it and people want to have these great success stories, but it goes up in huge swings and it comes down in huge swings. So put the money in there. When it's up, great, look at it, feel good. When it's down, don't take notice of it. Remember, it's money that you hopefully haven't planned on using for things like your kids' education or holidays or stuff like that. It's money that you can afford to lose. So always keep that in mind.
Yeah, and I think you raised such a valid point there about the emotional part. And I think, when people are wanting to or thinking about cryptocurrency and things, it's because they hear about all these massive increases of the price and how much money people are making. And so what are they really thinking there? Is this kind of really thinking is, well, what would this mean to my life if I had, X amount, if my money went up by so much? And I think that's the important part there. And also, again, working with a lifestyle financial planner is that we can help you get to those parts. You can be going on these holidays. You can get this extra thing, and you can maybe get it in a more secure way, or a more reliable way, as opposed to on a bit of a wing and a casino gamble.
Yeah, it's control the things you can control. That provides certainty. That's kind of just one thing I want to mention that you spoke about earlier is, there's cryptocurrency investments, and then there's like these schemes, right, where people are selling cryptocurrency and trading in it on your behalf, and it's huge, like ridiculous, guaranteed daily returns to be made. Like, we don't advise clients to do that for any money, 5, 10, whatever percent. I think it's simple. Like in South Africa, I think one of the biggest crypto platforms is Luno, and it's very easy. So when clients talk to me about buying crypto, it's like, yes, go open a Luno account, put some money in it, and you yourself go and buy those things and hold them. Don't invest in the guys who are promising you a 14% a day return, because that is a scheme, and that's the same like any other Ponzi scheme, whether it's crypto or whatever it is. It's a scheme, and you will get burnt.
Yeah. So what we're saying is, Mark, is that don't be afraid of cryptocurrency. We do say if you want to dabble in that, we're not saying run away, but we are just saying be careful in what exactly you are investing in. And if you are going to buy the actual coins, yourself holding your physical coins, and also then don't put your life savings into it, just like you wouldn't in any other asset class. We wouldn't say put all your money into bonds or all your money into shares, etc. So it's the same. Keep the same investing principles with cryptocurrency.
That's it.